All right, welcome to the Fiscally Awesome Podcast. I'm your host, Matt Gardner, co-founder and CEO of Hiline. Really exciting episode today. We have our very own Meenal Garg, our head of tax services at Hiline, on the podcast, talk about R&D tax credits. Very cool moment for me to be hosting one of our very own employees, and I'm excited to dive in. Hey, Meenal,
Hi.
welcome to the Fiscally Awesome Podcast.
Thank you,
How you
Matt.
doing?
Doing great, man.
Doing
Def-
great. So
Yeah.
Meenal has done us the great privilege of being the very first Hiline team member to ever join the podcast. And today we're going to talk about something near and dear to Meenal's heart that's very specific to what she does here, which is lead our tax services business. We're going to talk about the R&D tax credit and all the new legislation that's come out and how it's now made it something that is super interesting and available to technology companies, innovation ecosystem companies. And Meenal is our in-house expert. She's got lots of great insights to share. But before we get into that, Meenal, why don't you just give us a little bit about your background?
Sure. Thank you, Matt. So, as a background, I'm a California licensed CPA with over 25 years of experience. I have worked with fintech and a lot of tax customers where we actually help with a lot of R&D tax credit. And I've seen the power of the R&D tax credit, which can get to the small businesses and the startups. So that becomes kind of my favorite part. I do have intense experience with corporate tax filing, and me and my team here, we are 8 people team here. We carry almost 50 plus years of experience together. So happy to be on this podcast and share more insight about the tax credit and tax veto here at
Yeah,
Highland.
Meenal was a great get for us. Meenal joined us in May of 2024, and she's come in and she's kind of built our tax business up in a really incredible way. We've got really incredible people on the team. And Meenal, you've in your past, you helped unlock millions of dollars of R&D tax credit opportunities for businesses. What's the biggest misconception about the R&D tax credit, in your opinion?
Yeah, I would say there are two. One, where business owners, they think if R&D's project is not successful, they are not qualifying. That's not the case. Even a failed R&D project is qualifying for the R&D tax credit. All IRS wants to see your genuine effort to create or build something new or innovative. The second misconception, I would say, and which will relate more, where business owners think if I don't have the profit or the revenue generated, I don't qualify. That's not the case. You can still get the R&D credit benefit by offsetting your R&D credit against the payroll credit, or you can carry it over to the future years when you can actually offset this against the income tax when you start generating the profit. So those are the biggest two misconceptions that I've seen.
Yeah. So for the operator out there, typically very normal. If you're building something, a piece of software, innovative technology of some kind, generally takes a lot of capital, whether it's human capital or tangible capital. And because it's such an upfront investment and a long timeline to build it, typically you're not going to be generating income. You're going to be building your product for a very long time. And the credit affords you the opportunity to get a benefit from that in the build period. In the first 5 years, to me, I think it's the first 5 years, right? You have the opportunity to apply it against payroll taxes, federal payroll taxes, potentially some state payroll taxes too, depending on the state.
Depends. I mean, state payroll, there are some states which can offer the refund also. Normally, R&D credit is not a federal refundable credit, but some of
Yep.
the states, they do offer the refund against it. So state rules are different, but mostly the federal is where payroll offset is applicable. And this is definitely for the 5 years when you start your business. And the worth of credit is almost $500,000, which can offset against the payroll taxes. So
Which is incredible.
that's incredible.
So it's like a burn extender, right? So if you raise money to build your business, what it can do is extend your runway because you can start to offset some of those payroll taxes in the early life cycle of building.
Yeah.
And what you can't use, you can carry forward and you can offset against profits in the future when you get to a point where you're hopefully on the upward J
Yeah.
curve trajectory. And we hear about it a lot. It's just there's not an understanding of when I can start to benefit from this. So Meenal is going to unpack that for us today. So let's start with kind of help people understand the fundamentals. 'Cause I think tax can be scary and
Mhm.
people don't really understand, nor do they want to go try to research it. And I've been an accountant for 20 years. There's still a lot of stuff I read in regulations and codes that I don't understand as somebody's been there for a long time because it's very complicated. But Meenal's going to help break it down so it's hopefully easy for everybody to understand. So what exactly is an R&D tax credit? And Why should small business owners care about it right now? What has changed in the legislation landscape that's made it something that's becoming talked about more frequently?
Yeah. So R&D tax credit is kind of a reward that IRS wants you to give in terms of tax offset you can have against this credit for something new or innovative you want to build around the product or process in your business. So if you have something new or innovative product or features or processes that you are building, IRS wants to reward the efforts where all the expenses that you carry or you incur to generate this new product or process, it can give kind of a credit. IRS can recognize those expenses as qualifying expenses. Definitely, there is a 4-part test and certain criteria that we'll have to look into. But once you pass those criteria, you can have the eligible expenses. And based on that, there is a credit calculated. For federal, it is almost 10% of the qualifying expenses. State, it can be different. But if I take California as an example, it can be 7.5% of the qualifying expenses. So that is so powerful. Why small businesses should look into this? Because this is literally dollar to dollar offset when it comes to the income tax offset. So if you have $1 of tax due and you have the $1 of R&D credit, you don't have to pay anything. It's dollar to dollar offset. If I talk about the R&D payroll offset, it actually offsets your payroll taxes that you have paid, and you get the refund back of those payroll taxes in form of a check from IRS within 4 to 6 weeks after you apply against the payroll taxes. So very powerful credit, a small credit, but really powerful credit. And the extent of payroll offset is 500,000. The extent of income tax offset is not limited. It can be any number of the amount. So it's literally the cash back in your pocket, which can definitely help the small businesses or the new business owners to get the working capital back in your pocket.
Yeah. And so, what are the big qualifying expenses that businesses typically incur that would qualify for this?
Yeah. So there are only 4 types of expenses which IRS has defined, and all those expenses has to be incurred in the US. Outside US expenses are not qualifying expenses. The categories of the expenses are wages. If you are paying salary to your employees to work on the R&D project, that is a qualifying expense. Second is the contractor expenses. If you hired the contractors to do the R&D activities or R&D project in your business, that is a qualifying expense. Third one is the supplies. Supplies is mainly when you have something tangible to create, like manufacturing. So those supplies, the tools, the equipment that you use, that can be used. That can be a qualifying expense. Fourth one is the cloud hosting. So if you use, say, AWS or Google environment to do your R&D research and everything, that is something is calling. So technically 4 buckets. One is the wages, second is the contractors, third one is the supplies, and fourth one is the cloud computing cost.
Okay. And what types of companies typically are the best candidates for the R&D tax credit?
I would say like everyone who is trying to create something new or innovative is qualifying for this R&D credit. I've seen more credit coming for the tech startups because they are building something new or innovative. But that's not limited to an industry. I would say it's more applicable to everyone who is trying to create something new or innovative.
What about like e-commerce companies who are building like tangible goods to sell?
So e-commerce, if you are creating some kind of a portal online to do the business, that can qualify. But again, we'll have to look into the R&D project to see whether they pass the 4-part test or not. So what project you have, what activities you are carrying on will matter to the eligibility for the R&D credit. As I
Yeah.
said, like, any industry can qualify, depending upon the project that you are building.
If you're building something. So a CPG company who's building or engineering some type of product or good that they eventually want to sell via e-commerce or potentially via retail, like the phase in which you're developing the thing you want to buy is something that would be considered eligible.
Yeah. So we need to look very minutely what exactly you are building. But I would say, like, on a broad level, anything that you are creating something new or innovative in any industry can qualify for that. I would
Sure.
cannot segment it based on the industry.
Yeah. So anybody who's building something,
Yeah.
it's worth
It's what
calling Meenal and saying, "Hey, Meenal, here's the thing I'm building. What do you think?"
yeah. Yeah. You never know, like you can get 100,000, 200,000 back in your pocket.
Yeah. And there's been some updates related to the credit in the one big beautiful bill very recently. Can you break it down, Meenal, and what happened and what changed as it relates to this tax credit recently?
Yeah. So back in 2022, there was a change in the way you can claim the R&D expenses on the tax return. So before 2022, you were allowed to deduct 100% of the R&D expenses on your tax return. From 2022, there was a change where you had to capitalize and amortize R&D expenses, both US and non-US, on the tax return and amortize it over a period of 5 years or 15 years based on US or non-US. That meant you will get less deduction on your tax return and you will have more carrying over the expenses in the future years to offset. That demotivated a lot of companies because it could turn your loss into profit because you're getting less deduction on the tax return. And that of a setback for the startups because they could see like they're not getting enough deductions.
Yeah.
So with the change, IRS now allowed this deduction of the US based R&D expenses where you can 100% expend that out on the tax return. And that motivated a lot of companies to go back and claim the R&D credit. As part of this change, IRS also allowed for businesses to go back and amend their 22 and 23 return so that in case you have paid taxes because of this non-deduction that you got or you had to report on the tax return, you can get the refund back of taxes that you paid. So it's a very powerful change.
Can you get a refund, like an actual check for
Yeah,
2022 and 2023? So talking like big dollars, like
yeah,
multiple years worth of R&D,
yeah,
depending on what your business is. That's
yeah.
wild.
Yeah, so that is wild. And starting from 2025, by default, you can expend that out 100% on the tax return. So you have a choice to go back and amend. So what we do for our clients, we actually do the cost benefit analysis, where how much is the refund that they will get and what is the cost for the amendment they will incur. So if that looks substantial, I mean, it is all worth it for the client. So recently we have done for one client where we could get 60,000 back in their pocket by the amendment that we filed. So
Yep.
it's a very powerful change.
It's a very powerful change. So this is how it used to be before 2022, right? So
Yeah,
basically we're going back to the way that it used to
yeah,
be.
yeah,
That's probably like the window of time that we were just in. So like 2022, 2023, 2024, I guess it was not applicable because this changed.
yeah. There is a provision, there is a guideline. You can still claim this change on 2024 as well, but that will mean that you have to go back and amend 22 and 23 for
That's
sure,
right.
because this is a change of accounting method also for the tax returns.
Yep. So what Meenal is talking about is if you're building a SaaS product, a software product, and you have a CEO and you get 15 engineers and all they're doing is trying to build a product, taking all their costs for your tax return and having to capitalize them, which means they come out of your income statement. And all of a sudden you look like you've either made money or you haven't lost substantial money. And it doesn't make any sense. It never made any sense to me why you would make this change because they're in a very deep investment cycle where they're trying to build a product. And I think it was really confusing and really scary for a lot of the companies who were innovating and building because it had like real tax implications to them. And there's probably some that had they elected to do this, they potentially could have been paying tax if they had some amount of revenue.
Yeah,
They weren't
yeah,
pre-revenue.
correct.
Craziness.
Crazy. It was crazy. And it was so difficult because client did not want to go and report this as capitalized expenses on the tax return. And because R&D credit was related to it, if you claim the R&D credit and you don't capitalize, it was an audit flag for the IRS because you cannot do that. You are saying on the one side, you are saying you have the eligible R&D credit, and second, other side, you are saying that you don't have the R&D expenses to capitalize. So a lot of businesses chose not to report or capitalize the expenses and not to claim the R&D credit.
Yeah, it's crazy for the capital partners for the companies who are innovating because most of them require a capital partner to fund what they're doing. That factors into how they think about it too, because the last thing you want is you don't want any of the investment being used to pay taxes at all.
That's
And the R&D tax credit has been such a staple in the innovation ecosystem that it's always been a benefit that could be used to further the project. I just remember when the whole thing was happening, it was just as an operator of a business, explaining how this works and how it's going to impact you. It was a lot of just really hard and confusing and scary conversations for people at that
Yeah.
time. So I'm glad they fixed it, most
They
importantly.
Yeah, they fixed it for US expenses. For non-US, you still have to capitalize and amortize. But US was substantial. I mean, because it is related to R&D credit also. So technically, I'm seeing a lot of boost in the excitement of the business owners that we have. And they really want to go back, amend everything, and get the
Yeah.
refund and claim the expense R&D credit going forward. So,
Do you think that, because this has been like all over the news, and I don't know if like I see it because I'm in the finance
Mhm.
profession,
Mhm.
but do you think that this is broadly known by the world of business builders, that this is back and it's something that they should be aware of and treating differently moving forward? Or like people still have not realized it yet?
I think a lot of clients don't have what exactly it means to them. So they know this change is there, but whether it is applicable to them, whether they can get benefit out of this or not, they don't know if they want to amend and get the money back and everything. So a lot of clients are not yet aware, but for our client base, we are actually going back one by one and seeing whether they'll be able to get the refund back and they can be benefited with the R&D credit going forward. But it's
Yeah.
not well known for a lot of business owners right now.
Yeah. When we first started the company, it's been 10 years. So I was 3 years into that. So 7 years ago, it was more common than not that we would start working with a client who was innovating in some way, shape, or form, and they had never heard of the R&D tax credit. I think it's still pretty widely unknown. If you're in Silicon Valley, I think people kind of know more about it. But if you're building in other pockets of the US,
Yeah.
where you don't have an innovation ecosystem that is so vast, I think it's more common that people are unaware of it.
Yeah. Yeah. And second thing, like people think it's just for the tech startup. It is not the
Yeah.
case. So
Yep.
even if you are doing something like in the manufacturing industry also, you may qualify. So that is
What
something.
about, so I'm bouncing around, I'm going off script a little bit. So what about software development studios who develop proprietary technology for other companies? Is that a candidate? Does that become a place where you should think about looking to?
So for those, we have to see who owns the IP of the R&D and whether it is a funded research or not. Because funded research, we have to further look into the criteria, whether you have the rights and risk involved at your end.
The risk is sometimes in how the contract's written too, right? So who owns the risk of the build? If
Yeah.
it's like time and materials and there's no risk bearing, probably doesn't qualify. If it's fixed fee and it's a well scoped project, that is probably different. So it's very nuanced, and we're very fortunate that we have Meenal on her team who are so skilled at unpacking this.
Yeah.
Okay, so we're gonna go one layer deeper on this.
Yeah.
So the 4-part test, what does that mean? Let's make sure that qualification criteria are like super clear.
Yeah.
So the IRS is a 4-part test, which you talked about. That's your process that you go through and evaluate. What does a business need to prove that they qualify? You've kind of talked about it a little bit, but let's go through them one by one, starting with permitted purpose.
Permitted purpose is something it is related to your business, which can get you the efficiency or the performance of your business, any kind of product or processes you have. So it has to relate to your business purpose. And when we look into the 4-part test, we don't look at the R&D project. We look at the activities which are being performed for each of the project. So
Yeah.
permitted purpose, it relates to your business purposes and which can get the efficiency or the performance more enhancement in your product or processes.
Permitted purpose. All right, so I'm going to try to draw parallels to Hiline for a second. So if we bring in like a data engineering team to take all of our data and soup it up and use AI to help us run the business more efficiently, does that qualify?
That will qualify. Yeah.
Perfect. Okay.
Yeah.
So we got to talk about that because I do think we're going to be working on that pretty soon. All right. Number 2, technological in nature. What does that mean?
It means it has to relate to the hard science, which is the physics or biology or say engineering, computer science. It cannot be vague. It has to really relate to the hard science. We're performing some activities where you're using the hard sciences to do the activities.
Okay. Elimination of uncertainty.
Yeah, that's very important because that's directly related to the innovation. Innovation means you don't know
Yeah.
and uncertain. So Iris wants to see that there was uncertainty which we are trying to resolve with the activities that you're performing. So that uncertainty is a major factor that we look into when we actually look into the R&D eligibility. Because if you know
So,
everything, nothing new you are creating. It's
right. So
simple.
if you know it's going to work, if
Yeah.
it's just, I just got to write this extra piece of code and it's going to work, then like that doesn't.
Yeah, that doesn't count. I mean, it doesn't mean that you don't need to know your output, like what you are getting out of it. It's the process of kind of uncertainty, how you are trying to eliminate the uncertainty from what you're building.
Yep. That makes sense. The US, their attempt to help us stay competitive in the world with
Mhm.
innovating and being the best as we have been for a very long time at building the most innovative technologies and companies in making sure that companies feel some type of incentive to take that risk.
Yeah. So say you have another product in the market, but you are developing something at your own. Say if we are creating this portal, Matt, for where we are collecting the data and we are trying to automate the process. There are thousands of software outside which are already built, but we are doing at our end to eliminate the uncertainty, getting something out of it. That is something qualifying for the R&D product.
And we got one more. So we got the process of experimentation.
So there has to be a process of experiment where it can show you some documents where it shows like there's a sequence of the processes that you perform to remove that uncertainty. It cannot be vague. There has to be a series or a sequence. How did you perform this kind of experiment on the R&D project? So that is where the documentation come in the place where you actually have to maintain the tracker or the lab testing results and everything, which can show that you've performed the process in a sequence. Like this uncertainty came now, how to resolve this? Now, after this, there is something. So there has to be sequence. So this is where the documentation is the powerful piece here.
So documenting user testing, documenting project plans, documenting like all the code base, everything that you're doing, making sure it's really well documented is important. So I'm going to recap these because I don't even remember them. So the 4-part test is permitted purpose, technological in nature, elimination of uncertainty, and process of experimentation.
Yeah.
Those are the 4. Do you like
That,
start with one? Do you go top to bottom?
no. So with every project, we don't do at the project level, we do at the activity level. So there is a project, but after that, each activity we see whether it is a permitted purpose, whether it is a technological in nature, based on the client inputs and the documents they provide, we actually see whether all the 4-part test is performed or not. So it's not a sequence, it's parallel. We have to
Yep.
see everything together.
Okay. So let's talk about how to maximize the credit now. So avoid common pitfalls and just make this easier on yourself if you want to evaluate it. So what's like some practical advice that you could give to clients out there who are interested in pursuing, but maybe not feeling like they have all of the things that you're talking about readily available? So let's start with documentation. What documentation should your business be keeping throughout
Mhm.
the year as you're getting ready to explore it maybe for the first time and then continuously pursue it every year after that?
I would say start with what project you are trying to develop and then who are the people involved in the project, what exactly they are doing, how their time is tracked, and what is the trial and error basis, the process that you are involving. We start with that. Before that, I would say if you have the feeling or a kind of an idea that you are developing something new, don't just keep it inside. Just go and talk to someone who knows whether you can qualify
Call
or
me
not.
no. Call
Yeah,
me no and Hiline.
that's for sure. So call that. The moment you feel like you're developing something really new and innovative, just give us a call and maybe we will start the process from there.
So how do you like to work with your clients? Because I'm going to make an assumption that typically there's a little bit of assembling this stuff the first time you're working with somebody on the R&D tax credit. How are you helping them think about documentation? Are you giving them examples of what good looks like so that they can start to track moving forward?
Yeah. So basically, we do have a list of documents that we suggest our clients to maintain. How do we start once they provide us what exactly the R&D project they are doing or what they are developing? We actually go and see what are the qualifying expenses they can be eligible for, and we estimate the credit based on that. Then we have a call with the client to understand more what can qualify, what cannot, what project they are actually doing and whether it can qualify for the R&D credit or not. So a lot of info sharing goes there, but we do provide them the list of what exactly they should be providing for us to confirm whether they'll be eligible or not. So this is how we start the process. We collect the initial information from them, then we estimate the credit, We go and schedule a call with the client to understand it better and kind of getting consensus from them to what we are thinking is correct and what we are considering for the R&D credit is correct. We estimate that, we finalize, and then we finish the study and report on the tax return.
All right. So you can tell Meenal takes this very seriously. She's got a team that's just got this dialed in. So you've reviewed lots of other studies from other providers over time. You have services companies doing this. I think many payroll companies are suggesting that they also can do this. What are some of the most common mistakes that you see that either reduce the credit amount or create some risk that they have maybe tried to capture things they shouldn't have?
I think most of the providers where I've seen the studies, I have not seen the reports where they are actually showing how they have validated the four-part test for the R&D project. Most of them, they are just collecting the numbers and they are running how much is the R&D credit. But the important step is the first step, which is to validate whether they qualify or not, which can put the businesses in a big risk because in case IRS comes and they cannot prove that this R&D project was actually qualifying, IRS can go back to any number of years and reject the R&D credit. That would mean that you have to pay the taxes because you'll not get the benefit of R&D credit there.
Yeah, and it's so important to have it buttoned up because anytime that the IRS is cutting you a check
Yeah.
and big dollars worth of checks, it just inherently is going to come with audit risk. And to Meenal's point, you want to make sure that you've got really good documentation about your case and your point of view and perspective on why you claimed it. And if you don't have that, it can just be really distracting, probably really surprising at the end of the day too. And it could require you to potentially pay it back with penalties and interest and a whole lot of things you just don't want to deal with. So just make sure that you're really thoughtful about who you choose to work with. Again, I'm going to plug Meenal again, call Meenal and her team to that extent. Let's talk about your approach to this, Meenal, because what do you think makes our R&D studies different from some of the calculator-based services or one-time providers out there?
Yeah. So basically, I would say we are just not providing R&D credit study service. We actually partner with the client to understand how much and whether they can qualify or not. I can share some instances where we actually went to the client and said, this much is the credit, but this is risky. We don't think you should be taking it because it's not worth taking it. So that's a partnership that we provide. We are not providing a service there. We actually put ourselves in client shoes and see how much is the risk there, whether they actually qualify, and what is the benefit they will be getting after paying Hiline, how much they are getting. So that is, I think, the main essence of our service here. We do go inside and we review each and every contract with the contractors and everything, make sure that client is eligible. What I've seen in the other providers' study, they just take the salaries and the contractor expenses. And they don't consider the supplies or the cloud hosting expense. They are missing, and cloud hosting expenses, you know that they are very expensive.
Yep.
So client is missing a big part of the R&D credit there. Plus, IRS is very stringent about the title of the employee who is performing the R&D credit. I've even seen sales and marketing people qualifying for the R&D credit, which is definitely a direct cross for the IRS.
That's going to
And
get you in trouble. That's not going to fly.
or sometimes like the salary numbers are not matching with the W-2, which is totally kind of a big gap there because for salary, it has to be taxable salary reported on your W-2. So a lot
Which
of gaps
they can see that, by the way, because it's in their database. So it's not hard for them to match all that stuff up.
Yeah. And that's the core. That's the core of IRD credit. IRS will not give you the credit, which is not taxable expense for you, right? I mean, they want to see everything what is taxable, they get the credit out of this. You cannot say the gross salary is a taxable one. It's a taxable salary, W-2 box 1 salary. So at Hiline, we make sure that we obtain every single information, every single kind of a backup to confirm that what we are claiming is correct. So our client is well protected in case of audit comes.
Yep. It's a holistic approach because it's not just the R&D tax study. Ideally, you want the same person preparing your tax return and being your tax strategist because I've seen this before, like third parties, they give you reports. Here's what you put in the form, but you haven't really done anything. Potentially you've read through it. A lot of tax, as long as they've got it from somebody else, they're not going to read through it. So you just end up with a lot of lost context if you've got too many people working on this tax side of your business. So I think to Meenal's point, it should be a very special relationship, and you should have one person, one firm doing all of this for you to make sure that they know everything about your world that is your business. And I think that's the best way to maximize the potential and to basically create the lowest amount of risk, because nothing has been lost.
Yeah. And this is the benefit of working with us because we do the accounting for the client. So we have a lot of financial information available to us.
Yeah.
The client doesn't need to get involved and put their time. So we literally save the time to the client there, where we just obtain the technical side of the information for the R&D, and we perform our study, meet with the client, and boom, this is done in one call. So this is where I think is the power of the services that we provide. It's all inclusive and client just gets the benefit out of it.
Client
So
gets the benefit. Yeah.
yeah.
So these are all the things that whatever your situation is for how you run the finance function of your business, you want to centralize as much of it as you possibly can, because of the reason Meenal just said. You want to have access to the information. You want to have the context. You want to know the business. You want to know the people in the organization. And that just makes it a lot easier for everybody to work together and to make sure that everything gets done the right way.
And sometimes we go and review the books also to confirm that all the R&D expenses are classified correctly. So we don't miss on any of the expenses that client can be qualified for the R&D credit. So it's a very powerful tool for us to have the client for all the businesses, all the services involved, that they don't need to put a lot of time, because time is money, right, for the
Time is
business.
money. That's the
Yeah.
Hiline advantage, right?
Yeah.
It's all here. You can get everything you need right here.
Yeah.
And then the other thing I've seen over my career, the cost of the R&D study, right? I've seen some pretty wild fee ranges on these things over time. I think that the prices started to come down a little bit, but I've seen prices as high as 35% of the credit in the past. Um, Talk to us about how our pricing is different from our competitors. How do you think about this?
I think the other providers, they are charging 20% of the credit most of the time. I've seen of the federal credit as well, state credit separately. So if I combine all of them together, it is coming around 25 to 30%. Our pricing is 15% of the federal credit, and we don't charge anything for the state. Truly because we want to help the businesses. That's the core of Highline, kind of a motto that we share, right? So we want to partner with our clients. We want to make sure they are benefited with the credit when they are eligible. And we want to get more money to their business, which can help them run the business. So that's the essence of our pricing here, where we are charging 15%. And state credit is a byproduct of the federal credit that we do. So our pricing generally comes as a 10 to 12% of the overall credit that client gets. So there's a almost 50% of what other people are charging. But what value that we are delivering here is more of the longer partnership. So I can charge 20%. But thing is that I'm not creating a partnership with the client. I'm not thinking about their benefit. I'm not thinking about a long-term client. I want to create a long-term client for the R&D credit because it's such a powerful credit.
That's our whole business. I mean, we want our clients to get maximum value for a fair investment with us. And we want to work with our clients as long as we possibly can. And I think the best way to do that is to make sure that it's fair on both sides. And a lot of work goes into the R&D tax credit with Meenal and her team. We want to make sure that it's fair for us, but we also want to make sure that it doesn't feel like an overinvestment or it's too expensive to pursue it. So I think you said it perfectly. It's all about the long-term partnership with our clients.
Yes.
What about for businesses that have tax and accounting firms that they may be working with today? As much as I would encourage everybody to check out Hiline, if you do have somebody that you're working with, can we still work with you on the R&D tax credit, Meenal?
Yeah, R&D credit study can be performed like a standalone. So I don't see any kind of a hold that we cannot do the R&D studies for them if we are not doing accounting and tax. So totally standalone service we can have, and we can definitely help the businesses for only for the R&D tax credit.
So we're getting to the end of the year, right? It's Q4. Tax time's coming, right? Everybody's thinking about it. We're planning for it. What should everybody think right now? What's the right next step for folks to be taking if they're listening and they want to learn more? Is this the right time of year to be having the
Yeah.
conversation?
Ye- Yes, because most of the expenses are incurred. You have more visibility about the R&D project that you have. Where do you stand? And what is the expense side of it? And how much is the credit you can get? So I would say this is the right time because January starts and we have actually have to start looking into the filing the taxes. And with the R&D payroll offset, sooner you file your tax return, sooner you get the money back from IRS. So this is where I think this is the right time for getting started on the R&D credit. Just give us a call. We will evaluate for how much is the credit you can have, and we can start the process, say, by December or November, as soon as you approach us.
Okay. So I am like steeped in R&D tax credit knowledge. I have only known it at the surface level for a very long time. So I just learned a ton personally. So I hope everybody else did too. You can tell Meenal is glowing right now because she cares deeply about this. She's
Yeah.
passionate about what she does, which is why we love her here at Hiline. And we're going to wrap it up with some fun. You want to do a little rapid fire? Couple
Yeah.
questions, Meenal? You
Yeah.
fire your answers back at me?
Yeah.
All right. Biggest red flag that a business is leaving R&D money on the table.
They think they are not eligible or the R&D project is not successful, so I'm not eligible for the R&D credit.
Yep. Just shutting it out of their brain. Nope, not me.
Yeah, not
Yep,
me. Yeah.
not me. Okay. You're saying potentially yes. So everybody should be thinking about it more deeply.
Yeah.
One myth about R&D credits that you wish you could bust forever.
Yeah, it's if I don't have the profit, as I said, like at the start, if I don't have the profit, I can't have the R&D credit. No, you can have the R&D credit as long as you are developing something new or innovative, and even if you don't have the revenue or the profit.
Yep. And the timeline matters that one, right? So it's like making sure you capture in the early life cycle of your business, the first 5 years where the payroll tax credit election can be made. Is that still true?
Yeah, that's true. So there are criteria to it, but yeah, the first 5 years of the
First 5 years.
incorporation. Yeah, so we do evaluate, and as I said, it's $500,000 offset that you get against the payroll taxes. So it's a big money, and it gets carried over until it is exhausted. So if you are not getting in one payroll filing, it gets over to the next payroll filing, and you get the benefit until it is exhausted.
Yep. And you can also just stack up these credits until you have an exit someday, and that also will help everybody too.
Yeah. So later, say if you think like you'll be profitable in next 5 years, it is best to start now because you'll be accumulating that much money in the R&D credit, which will offset you right there when you start generating the profit.
Boom.
Yeah.
Okay. Last one. Best piece of advice for a founder who is on the fence about whether they qualify.
So call us.
Call us. Oh, yes. Call us. So if people want to learn more, how can they connect with you, Meenal? How can they learn more about Hiline?
Our website, go there and just say that they need assistance, or you can reach out on the LinkedIn or our email. Anyone on Hiline's team, you can reach out and they can connect with
This is
us.
so funny. I'm plugging my own company. You can check us out at hiline.co, hiline.co. You can find Meenal Garg on LinkedIn. You can also find me on LinkedIn. And I think the other cool thing I just want to leave us with, Meenal, so we have built an R&D tax calculator. That's a fun thing to play around with.
Yeah.
You can find that on the website. And we're also running a limited time promotion right now, Meenal.
Yes. So first 10 customers who come to us and they have up to $20,000 in credit, we will do the R&D study in free.
Okay. When does that promotion start? Right now? Did we just launch it?
Now, right now, as we speak.
As we speak, it's going
Yeah.
live. Okay.
Yeah.
So we'll have to push it out. This was fun having you on. Hopefully I've been a good moderator and you've had fun, and I appreciate you being a good sport, and I appreciate dropping all of the R&D tax credit knowledge. So thank you for everything you and the team do every day, and I will see you very soon.
Yeah. Thank you, man. It was nice.
All right. Thanks, Meenal. Bye.
Bye.